Prabhudas Lilladher joins in. Amisha, great to have you with us. It's a good day if you've been invested in the IT space, given the kind of stellar returns. What's the sense that you're getting about this basket itself?
So I think that, particularly at a time when the result season is on, market had a very good run on the hopes of a good turnaround, investment cycle coming back, and so on and so forth. But as what we meet with the reality in this quarterly results, which otherwise also we all knew that the real recovery will be 2 to 3 quarters away, but the results in banks, capital goods will still be much behind where the prices have run up. While in case of software particularly, the momentum in terms of results will be maintained for a couple of more quarters before the rest of the pack really takes over in terms of growth. So that's why we are seeing a very good, traction or reaction to the numbers which are coming in, and the stocks are performing well. But I think if one takes a slightly more medium to long-term view, then the place to remain invested still would be the domestic stories rather than an overweight stance on IT.
Amisha, the only problem, if at all, and I don't know how would you counter that or that argument, if you heard the commentary of MS Unnikrishnan of Thermax today on the channel, if you look at the ABB numbers, he mentioned that things are not bad, but this is on expected lines and the recovery is at least a couple of quarters away. I mean, in that case, is it that we are putting in the money too soon in the cap goods space? Maybe the better time could be 3 months or 4 months down the line.
But market typically definitely runs ahead, much ahead of the change or actual change. And also the fact remains that the change this time or the cycle this time is expected to be much longer, much larger, much deeper than, in that kind of growth cycle which we are likely to enter. Does that 3 month really count? And I'm sure, all those fund managers who really need to balance both the daily NAV pressures, monthly performance pressures, they need to keep shuffling between. But what I was trying to say is that the real money probably will be made in some of these stories only, which are maybe in financial space, maybe in capital goods and some of the engineering product space, rather than a big money or a wave which might continue over next 2 to 3 years in IT. That's what we believe.
Stay with us, Amisha, just a moment to address Spark, and it's been a further up move on that counter. Mitesh Thakkar had recommended a buy, so good going, double-digit gains, almost 12% at 186. Amisha, it's been fairly sluggish for, the cement sector. What's the view on the overall demand environment improving and, seeing a complete turnaround within this space, or would you be avoiding it?
No, we are not avoiding it, but we do agree that the stocks have run up quite a lot, and for the time being, both the improvement in EBITDA margin, which is expected because of increase in prices, as well as a slightly better volume, seems to be in the price. But if you see, once again, take a slightly longer term view, then we think that the capacity addition in the sector is going to be lower than what happened in last 3 years, over next 3 years, and the demand growth will be much higher in next 3 years over last 3 years. So this, once again, this sector, which in the short term seems to have run a bit ahead of its fundamentals, will continue to offer a very good scope for appreciation over a longish period of time. So, because of the same issues that we are facing or challenges which we are facing in the economy, that the real traction on the ground will be maybe 2 to 3 quarters away. Some of these stocks may be in a consolidation phase for a while before taking a much bigger move up.
Amisha, I'll want to scratch that point a bit further yet again. Just hold on, it's 2:55, so we need to get in those trading ideas going. Coromandel International, the PAT numbers are out as well, 32 odd crores. Just pull up the comparative numbers as well. Sales are flattish as well, so no great surprises on the top line. I doubt that there could be many positive surprises or really big surprises on the bottom line, but we'll just wait for those numbers. I think down 5% now. So 32 crores versus 21 crores. Okay. That's an interesting PAT number, but an even more interesting reaction to the stock really. 32 crores, the Q1 PAT versus 21 crores. And then the top line has been flattish for this one, 1867 versus 1883. So no issues on the top line. The bottom line has actually risen 51%. The stock recovering now slightly, ever so slightly. 247 is where it is trading at. A quick one, Hitesh on Coromandel, and of course your trading idea at 255.
Neeraj, my trading idea is a sell on Shriram Transport Finance. That's a sell with a stop at 895 for targets around 840. Coming to Coromandel, I think it's not doing much, but for the last few weeks it's been range bound between 265 to about 230. It's given a breakdown today with stock starting at the higher end of the range. I think it might head towards 230 in the next few days.
Sandeep, what about you, your trading idea?
Aman, I don't have any new ideas at 255. I would repeat the same ones even at higher levels because the whole market is not going up. I would go with a buy in a Hindalco with a stop loss of 188 and a target of 201, and a buy in a TCS stop loss of 2555, target 2620.
Cement, metals is something that we'll speak with Amisha Vora as well on the other side. She stays on, Mitesh and Sandeep stay on. Take a very quick break as Coromandel International numbers fail to enthuse the street. Still down 4.5%. We come back from this very quick break and continue our discussion. Stay tuned.
Don't you hand me down the blue. I'm done waiting for my luck to turn. Gonna lose them blues.
The new Polo feels that good. Volkswagen, das Auto.
TouchTalent.com is a community to showcase, appreciate and monetize creativity.
So Boond works for energy access.
T10 Sports basically customize the sportswear.
Meet winning ideas that are redefining the business dynamics.
Competition in this is going to be very severe.
8 crore is a huge turnover for a startup.
Catch business icons, inquire into today's brightest minds. Watch Lufthansa Runway to Success, only on ET Now.
I think receiving an award is number one, but secondly, to cap it all, receiving an award from Mr. Kamath, it definitely takes a lot and it's definitely a privilege for companies like us.
It feels very delighted to be the leader of tomorrow. I'm very happy to receive this award. Work hard, dream big, and you get success.
If you feel you never stay in one place, if you feel like you float in time and space, if you feel in this moment nothing matters, if you feel in this moment you're alive, if you
Welcome back. Still tuned into closing trade. 77.92 on the index. So we've certainly consolidated from that initial pop that we saw in trades, although we are currently clawing our way back up. So turning out to be a fairly choppy day of trade. Broader markets still losing out. Amisha Vora is still in conversation with us, and we were talking about prospects of the metal sector improving, and a lot of managements also that we've been speaking to say that on the back of the new government policies, as well as the fact that globally things might see a turnaround, prospects certainly are looking strong. Do you concur with that?
So I think that, there are a couple of factors, and the stocks will be impacted differently within the sector. So first on the block was Sterlite, which gave a stellar performance, and so was Tisco. After having reached where they are, I think a couple of other stocks within the large cap may offer better returns from here, as also mid caps, which were really butchered within the commodity or the metal space because of both want of demand, chock-a-block with very high interest costs. I think gradually they would also revive as the demand scenario is likely to improve. But once again, when I compare the metal and cement, I would rather be more comfortable with cement, or when I compare the metal with some of the other capital goods and automobile or other sector stocks, I would be more comfortable in the others. So I won't be a very overweight on the sector, but I'm sure there are select companies which merit a closer look, and at the same time the sector overall will do better than what it did in the past.
Some individual names, you know, Amisha tracks a lot of these stocks very, very closely. Just want to point out a few. Atul Limited is now up 11.5% at 1207. So talk about strong numbers. This is done well. There is strength in Spark. We spoke about it. Amisha, the two intriguing names, actually MCX is probably not as intriguing as financial technologies is, because the last 3 or 4 sessions, this one has had some amazing gains as well. Probably with reason, a lot of money coming into its fold as well. Maybe the earlier team going out as well. What's the view on MCX and financial technologies both, if you have a view on FT in the first place, that is?
So on a very broad basis, the stocks are not under our active coverage at the moment, but on a broader basis, particularly in case of MCX, I think that the clouds which were around, you know, in terms of the overall credibility seems to be now waning away. But the key further trigger would still be probably looked at by way of STT reducing or going down, which may bring much higher volumes again. But the fact still remains that MCX as an exchange segment for a few commodities continues to remain a monopoly, and which is where over a longish period very good value can be unlocked. So on a medium to long term basis, that continues to look good, but the key trigger for further appreciation, I believe, will be in terms of some policy changes being announced to get more volumes going, which has been really butchered in last 1.5 to 2 years time.
They say that you should buy quality stocks when they fall on bad news. I would see it, or some of the other tire names qualify there, Amisha. I mean, it's a space that has seen robust price appreciation for the past 6 months. No surprises there. Yesterday's numbers for CEAT in particular has led to the stock going down almost 15% in 2 days alone. What do you make of this franchisee, and if not CEAT, any other tire stock that you guys under your coverage like?
So once again, tire stock, I believe, is a classic story where, you know, because of huge slowdown in the both commercial vehicle, auto, overall auto segment is facing the challenges at the moment in terms of their top line growth and in terms of a bit on their gross contribution, that is because of some of the raw material prices. But if you see on a very slightly broader basis, I think that the industry is a very well consolidated industry, and still in terms of their sales to market cap, numbers are still very attractive. Also in terms of their price earning ratios, the numbers are attractive, and we are staring at a long turnaround in the fortunes of both commercial vehicle as well as passenger vehicle market over next 2 to 3 years. So I think that some of these corrections would be very good point, may not be just now, maybe a little more correction, and it would be a good entry point for a longer, medium to longer term period.
6.5% up for an MRF, 24414. So doing very well. Amisha, I understand you are in a bit of a rush. We'll let you go after a couple of questions, one from my end, one from Avans. My question is obvious. What do you do with some of the broader markets, the stocks right now? I mean, you track a clutch of stocks, you look at the businesses, you speak to those promoters now and then. Anything in the last 15-20 days, ever since we spoke post the budget, which has convinced you enough to have a serious look at the business?
So some new names than what we spoke before, right?
Well, you can probably reiterate something if you're very confident about it, Amisha. I'll let you make a choice.
So some of the names which we still like on a slightly medium to longer term basis in large cap continue to be, in the space of financials, very known names, but we still think that they will do very well, be it ICICI Bank. We continue to feel that, we recently did a call with NHAI and we felt that what kind of plans from 1400 kilometers to 5000 kilometers of awarding of roads which they have target for this year, I think some of the companies within that space are also very well placed to capture these orders. At the same time, the unlocking of capital for the sector, be by way of recent changes in budget of infrastructure trust, be by way of those infrastructure bonds by banks not attracting SLR, CRR, so that the sector is really getting ready for a longish move. In the largest large cap, of course, Larsen continues to be the darling, but one can start going down the lane in this and start looking at some of the more names in mid cap and small cap. I think they will also do very well. So these are the two sectors which we think will do very well. Then we can go down a number of names because when the overall economy is expected to do better, the choices definitely increase.
No, for that I'll need half an hour with you, but I understand you have to go, so let you go at that, Amisha. Thanks so much for joining in today and giving us your views. Now let's cut across to Sajjan Jindal.
The worst appears to be behind us and the economy is likely to pick up pace going forward. After more than 3 decades, we now have a stable government at the center with a clear majority by a single political party. This is likely to have far-reaching consequences over the medium-term outlook for the country. From expected ushering in of reforms, a revival in economic growth and strengthening of governance framework. Power sector overview. Power and infrastructure are key focus areas for the new government, and this bodes well for the medium to long-term outlook for the sector.